Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Sunday, July the 17th. The year's 2022. Let's talk trading. Weekly open and gap. As always, these videos are for educational purposes only. Your results may differ from mine. Let's take a quick look at the weekly chart, and we can see that the pound is 22 pips above the weekly open, 20 off the high and 25 off the low. One interesting note here, the pound franc is the only pair that has not filled the gaps so far. And we are 7.5 hours into the trading day. A quick look at the month shows we're 289 pips below the monthly open, 126 off the low, 293 off the high, and we are still below the previous month's low. We're putting in the opening range for the week, but we are 92 pips below the opening range low of the month. And we are 1,644 pips below the yearly open. And it looks like we have broken above the previous day's high, and the previous day was an inside bar, and right now we're a little over 8 pips above the Friday high. And as you can see here with all the blue and gray, we've got plenty of daily inside bar action. We have some weekly and just a handful, a little less than a handful of monthly inside bar action. Somebody was asking about inside bars and how to trade it. I believe they wanted to know more about it. Once again, it's just a simple horizontal line trade, and it's just based on the fact if the current candle or the previous candle didn't break out of its previous candle's high or low, then price is getting compressed, and it's kind of like a spring. You compress it, and it has to uncompress when you take off that pressure. So that's what's happening with price right now, where it was compressed and now it's breaking out. And you can see it also broke out of the inside bar and the bar previous to the inside bar. So, but we've actually fallen back below that high. So when you look to the left, those are sometimes things you can look at. So if you were in profit, then you see it broke above here and came back and then started to break below that high, you can take your money off the table, and maybe you could always re-enter at the same level, but when the price is moving in your direction as opposed to against you. And that's something a lot of traders sometimes seem to forget. You know, when you hit your stop, you can possibly think of that as, okay, I'm going to pause right here. And then when price comes back to the level where I stop out, it might continue. I know that happens to me, you know, about half the time, where I get into, say, the initial trade and I stop out. And sometimes I say if I just wait an hour or more for price to get to that level, then I wouldn't have to endure some of the losses, you know. And think of the losses temporary. It's like, okay, maybe I'm going to say take a 7 pip loss right now temporarily, but when it comes back, it might come back, pick up right where I stopped out, hit where I entered, and then continue on. That, in fact, that happened big time on Friday, and I took advantage of it. So far, the range for today is only 45 pips on the pound. We only have one pair over 100 pips, and that's the new beast, the pound New Zealand dollar. As far as the buy zone traders, they were rewarded right off the get-go here. Rats, the range is really too low for rats. It's only like I said, 44, 45 pips, and like to see the range a little bit higher. Though you can still trade the rats, but I like to see the range a little bit higher. Bambino Flex indicator said to go long near the pivot. We haven't hit the daily pivot, but we have hit the weekly pivot. So we've taken out that weekly pivot. And as you can see here, here's yesterday's high. Here's R1. So Bambino Flex said to go for the long. As I just mentioned, we missed the daily. We've taken out the weekly. And we've missed the monthly. So we'll just have to wait and see what happens there. In and out of the upper wick zone, you got one extra try there. It looks like if it comes back down another 10 pips or so, you might get another try. And on the ranges, 45 pips so far, as mentioned earlier. It's not even registering. Last week, actually the past 2 weeks, we see we've had a decrease in weekly range. Maybe this time we'll go back up to at least the ATR of 300. We'll just have to wait and see what happens. We haven't broken out or the high of the low the previous week. High minus close 22, close minus low 23. So you can see we're just ranging right now. Wall Mall, this isn't the time to trade the Wall Mall statistically, but you can see here taking out that previous H1 low off a 3-ball, be good for 12 pips, and even if you waited here to short the 90, you'd still be up 6-7 pips. And sometimes that's all you need is just a simple trigger like the Wall Mall method. And the thing is, you see, many traders, they'll get in, they'll trade the method, and they might not be profitable, and they blame the method as opposed to looking and seeing what they could improve. For example, they may have let 2-pip winners become 7-pip losers. And so why blame the method? If you keep seeing an opportunity to, hey, if I take this trade, I can make a couple of pips each time. Well, why not do that? That's the tricky part about trading. You see, I've mentioned before, you can turn trading into a gamble. And for some traders, that might work best where you place your trade, you set your stop, you set your TP, and you let the market do what the market does. But some traders can trade tick by tick, and when they see opportunities, they see movement, they see momentum, they see ranging. They just get a feel for it. And then they can just, extract a couple of pips at a time and just stack up the pips. I mean, what's the likelihood of you taking 5 2-pip winners versus 1 10-pip winner? I mean, in this particular case, you would have taken that breakout. You could have had your 10 pips. And it happens a lot, but the question is, how often do you actually get a chance to do that? How often do you actually do it? Because the opportunity's there, but do you get nervous? Do you get wiggled out of the trade? Do you have the intestinal fortitude, also known as guts, to stick in the trade? Do you get greedy? Do you get anxious? These are all those emotions that we've talked about before. In fact, that's a screen I guess I haven't really been showing. We haven't really shown those screens here. We talk about the risk management, but the brain management. We did do the fear series, Maybe we should do a regret series. But see, the thing is, this is all you. Brain management. It's got nothing to do with the market, really. It's it has to do with you controlling your reaction to the market. Because once again, see, pain doesn't come from the market. It comes from how you react to the market. So if you can be stoic about it, and it doesn't matter if it goes up or down, if you win or lose, you feel almost no emotion, you're almost numb to it. Well, now you know you're on your way to becoming a good trader. Because you really shouldn't be happy about wins or mad about losses. What you should focus on is executing your trading plan, executing, your entries and exits when you're supposed to. And that is really the main thing about trading, which a lot of people, they just really want to find some method that they can put the trade on and almost win every time. They believe that it exists. But see, that's not the trading part. The trading part is what you do after, between your entry and your exit. That's the trading part right there. That's the hard part. Because once you decide to exit the trade, well, now the trade's over. So it's all that between time. Watching your profit go up, watching it go back down, and deciding when to take it. And it's really hard to do sometimes because you might go into the trade with an idea, and then as soon as you get into the trade, then all of a sudden things change. So let's say you went into the trade and you go, okay, I want to get 2 pips. You click the mouse, and the next thing you know, you're up 3 pips. Now you start to think, hey, maybe I can get more pips. Then the next thing you know, in the blink of an eye, you're only up 1 pip, or you're down a pip, or you're at break even. And now you're upset because had you followed your plan to take your 2 pips, you would have actually gotten a bonus pip. But no, you altered your plan and the market bit you. And then it just keeps going against you. Now you really get ticked off. So that's why sometimes you have to just take what the market gives you, stick with your plan, because just think about it. If you would have taken those 3 pips and then the market went against you, you'd be all happy. If you would have taken those 3 pips and it ran up and you could have had 10 pips, then you're going to beat yourself up. And right there, that right there is the turning point. That's the fork in the road. If you cannot beat yourself up and just go, oh, well, maybe next time. But it's like, hey, I wasn't going for 10 pips. I only wanted 2. I got 3, so I got a 50% bonus. I'm happy. That's what you have to work on as a trader. Really, that's the main thing. All these indicators and methods, they're not going to do you any good if you don't have that one aspect down. And it's just really so crucial. I mean, here's a lower high setup getting ready to happen. When this candle closes, this lower high will move down. And the question is, do you take the trade? How much do you want to get out of it? You think, well, between 3-ball and 3-ball, there should be at least 50% bounce. Maybe I'll take the 33% bounce, or the 23 fib, the 38 fib, whatever. But you've got to plan that ahead of time and then stick to it. And so we haven't pushed the year-to-date accumulated range. I don't really see anything earth-shaking here. So, fellow traders, I hope you had a fun and safe weekend. I wish you a profitable trading week. And when you sit down at your trading terminal, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.